This work, along with hundreds of thousands of jobs, are currently in jeopardy because of politics in Washington. And the impact of this policy won't be felt overnight, but it will be real.
That was the president speaking at a shipyard in Virginia yesterday about the effect of the sequester. President Obama has been taking a show on the road, as we talked about, warning whoever will listen about the potentially damaging impacts that will happen come this Friday. And he's not alone. 350 prominent economists have now issued a statement warning that, quote, the fragile recovery is threatened by obsessive concern with cutting deficits. So as it becomes more and more likely that the sequester will happen, what in fact will the impact on the market be? Well, joining us now to sound off is Michael Regan. He's Bloomberg's market editor at large. And I guess just when I think I got this figured out, Michael, the market jumps almost 200 points today. Can you explain if the market hates volatility and uncertainty, why it went north today?
Well, part of the reason with the sequestration is that it's, if you look at the dollar figure, $85 billion in cuts this year, it's just really not that scary of a number for Wall Street to digest. Compare it to the fiscal cliff at the end of last year when we were looking at about $600 billion being taken away from the economy. $85 billion, basically seems to be a number that the market can live with. And, there's sort of two camps of investors that we've talked to. About half of them think that some sort of last minute deal will be struck, that there's a lot of posturing going on with these negotiations, as there has been with other, past budget negotiations. The rest of the investors we talk to just don't think it's that big of a deal. $85 billion. The real preoccupation with the market right now is what the Federal Reserve will do. The Fed's been buying about that much in bonds and treasuries and mortgage securities every month. So, whether or not the Fed decides to keep up its pace of bond buying at about $85 billion a month, which ironically is the same amount as the yearly total for the sequestration, is sort of the big issue with investors now. And there's kind of a sense in the background that they might be discussing lowering that purchase amount and sort of scaling back on the stimulus. And their minutes from the last meeting certainly indicated that there was a pretty robust debate about that going on. And the market took a pretty big dip on that last week. So Ben Bernanke going to Congress today and yesterday and not really doing anything to fuel that concern is really what's keeping the market up now, combined with some pretty decent economic data. We had consumer confidence rose higher than estimated yesterday. Housing data over the last 2 days, both as far as home sales growth and price growth has really been better than economists expected. So,
but Michael,
all,
if I could jump in,
the economy is humming along.
Right. When Bernanke went ahead, he did say, listen, this ain't going to be good. If you do this, it's going to slow growth, which is small enough as it is right now. It's going to go negative territory. And I'm curious, if investors aren't sweating Friday, are they worried that if Congress is the gang that can't shoot straight, what happens on March 27th when you could have a shutdown? Is that date at least on their mind, saying this is the last thing we need? And I guess we'll talk internationally in a second. Are they worried about a month from now?
Well, they've sort of been taking these deadlines as they come. Again, they've really gotten used to this sort of last-minute negotiations and eventual resolution before the firm deadline hits. So, as of now, they're willing to sort of look past that. As far as the stock market, a lot of investors last year really got caught flat-footed and were a little too defensive, not really buying stocks at the rate they should have to keep up. If you look at the hedge funds or just plain mutual funds, last year most of them basically trailed the S&P 500, which means an investor could have gotten a better return just by buying an ETF than investing with most hedge funds or mutual funds. So there's sort of this mentality now that it's time to get the risk on in your portfolio, and any sort of dip caused by any of these uncertainties is a chance for investors looking at an entry point into the market to get back in. So obviously the threat of a government shutdown later in the month would be a much bigger deal than the sequestration. But I believe the market is, like I said, it's really gotten used to these deadlines. And I think most investors believe that some sort of deal will be struck to avoid that.
How much, though, is Europe confusing the equation, specifically with the recent Italian elections and the idea that, they basically would say to the Brussels agreement, never mind. the idea that at some point, if Italy walks away, Germany's going to say, why are we supporting all this? How much is Europe really the elephant in the room?
It's a pretty big elephant in the room. I mean, obviously, as it has been for the last 3 years. The market dropped almost 2% on Monday after the elections showed that no clear party had a majority and was going to be able to govern. Bersani had run on a platform to sort of keep pace with the austerity plans that they had, and that the bond market, especially in Italy, was happy with that. The bond market reacted pretty violently in Italy. Yields jumping more than 40 basis points on a 10-year Italian bond yesterday because of that uncertainty. So Italy, I would say at this point, is probably a bigger deal from the market compared with the sequestration in the U.S. For the near term. The other, if Italy's the elephant in the room, then I don't know what you call the ECB, but they're the other elephant in the room. Basically, speculation that they will prop up the Italian bond market if needed. They committed to keeping those yields low last year. They're not as transparent as the Federal Reserve in the U.S. about when they're going to step in and sort of tamp down those borrowing costs. But I think the assumption is that the ECB's there, standing ready to buy bonds of these struggling nations if they need to.
Hey, Michael, just because I've been so positive this whole segment, I got one last one for you. And before we dismiss him, he's been more right than wrong. I'm talking about our favorite friend, Mr. Rubini, who says, as you probably saw, that the asset bubble, the coming bubble, is going to be bigger than the one that we had in 03, 06. He goes on to say it'll be the mother of all asset bubbles. Is he the only one with these kind of fears here? Or how much are people saying this guy's been right before, we could have major headaches?
No, there's certainly, that's also on the back of a lot of investors' mind, has especially this really unprecedented stimulus from the Federal Reserve and central banks around the world has really pumped so much money into the system that there is a lot of concern about where the next bubble is. Picking the next bubble is sort of, a parlor game on Wall Street, and it has been for the last few years. So, it's not exactly an uptick in bubble predictions, but it's definitely something that people are keeping in the back of their mind.
All right, Michael. Michael Regan there from Bloomberg. Thank you so much. All right, let's bring in our table on this. You know what I'm curious is, if Republicans are the biggest advocate for not just Wall Street, fighting against some of the regulation and certainly fighting against to help Wall Street be the engine of economic recovery and business in general. Wall Street's the one saying, if you listen to some of the biggest financial services firms and the biggest investment banks saying, guys, don't do this. Don't do another sequestration. Don't do a government shutdown here. Whatever you do, we don't need more uncertainty in the marketplace right now. It seems that the audience listening least to them is the Republican Party. Work that out for me, because obviously you got a lot of clients in the New York market right now, and obviously, the financial services is one of the biggest, if not the biggest, most important driver, even in New York. And it seems the people listening least are the ones that are fighting hardest for them, at least on regulations.
I think because the substance is not being talked about, and it's really going towards the politics. Obama picks a fight with the Republicans come back at them. There's no talk about what's actually the problem, which the Assemblyman had been talking about before, that we have to really talk about the issue versus just looking at the politics of it. But that's what's happening right now. It's this back and forth. It's sequestration, and that next couple weeks down the road, it's going to be continuing resolutions to keep the budget, to keep the government going. They're not talking about the specifics, and that's the problem. They're being completely taken off message. Obama is the message machine. That's their biggest impediment to getting anything accomplished right now.
Do you think they actually want an agreement? It's a stupid question, but I'm saying let's say Obama laid out, because I think down deep he does want to do reform on Medicare, because he knows the math doesn't add up. If he came out with real entitlement reform, would there be a danger that elements on the right would say, well, we just can't agree with him, even if we like it?
I think there might be. I think this is less about economic issues and more about the politics, as Anthony was saying. It's about positioning for the future and the next election down the road.
Do you know how tragic that is? You disagree with him?
May I politely object? I think that, speaking as a member of the House, obviously, representing people across the spectrum, as a Republican, I would have welcomed that kind of sincere leadership from the president on a
And
very
would say,
tough
you know what,
issue.
I'll meet you halfway and we'll give you more revenue?
Mr. President,
would that part of it?
if you're taking that sensible leadership role on our long-term obligations of all sorts, I'm with you.
And we'll put
Absolutely.
revenue on the table. We'll meet you halfway for the
let's-
betterment of America.
I've always said we need to grow revenue, but let's grow it the healthy way. Let's put more Americans to work. And there are but we
tried.
reached across the aisle on taxes, and we did compromise. I compromised. I voted.
This is about ideas. It is not just about cynical politics. There is an idea that the Tea Party and many right-wing Republicans have it called austerity. It is that we've got to reduce the size of government and reduce government spending.
At all costs.
At all costs. That is the goal. That policy, that economic
Richard,
policy,
name-
has failed. It's failed in Europe. It's failed here. If we can get them off that into an intelligent discussion of the entitlement issues in the out years, there's place for an agreement. But as long as the austerity economic policy is the policy of the right wing of the Republican Party, it's going nowhere.
That's the goal is not austerity. The goal is to make sure that we're doing the right thing by the American people. We've got 24 million Americans out of work or underemployed right now. We need to get them back to work. And the way to do that is to make sure that we actually have an economy that can grow.
And the way to do that now is to stimulate the economy. 300 economists said the same thing. The notion that you stimulate the economy by cutting government spending in the middle of a recession is bad
Wait,
economics.
stimulate it with what?
way?
Another stimulus?
What's
So
the-
we
right,
go
what's
into
the
more
best
and
way-
more
the
debt?
best way-
It doesn't
exactly.
work.
The best
That's
way-
the
It
problem.
works.
I get your message,
It
and
works
it's
in the
resonating, but
short
it doesn't
run.
work.
It doesn't work in the long run.
Richard,
It
And we
didn't,
don't
no,
get-
but it didn't work in the short run
Of
either. We
course
didn't.
it
We're
worked.
supposed to have
Richard.
500,000 jobs a month,
you say
according
that?
to
Of course
President
it
Obama and Joe
worked.
Biden.
Right.
Never happened.
Never happened.
No, it doesn't work.
It
The
works.
proof.
lost
Look at the
jobs.
history.
It works
I lived it.
everywhere. We didn't lose jobs. Since the president became president,
We've
we
had a-
have seen a dramatic increase in jobs of close
No,
to 6 million.
we've still had a
loss in
net
jobs
loss.
came in 09 and 08.
We have to at
had-
least be fair to say
We've had a
what
net loss.
when he walked in, what the job loss was pacing at.
No,
in
but that
09.
doesn't matter.
You
The
can't-
point
you can't
is
not
that
count
you're
that.
elected president for
Yeah.
the second term. Man up and do your job. I don't care, Democrat or Republican. Whoever's in there, do it.
But
who are
Anthony,
available for
how?
work.
It sounds good.
Work-
But who are you dealing with? I mean,
Take-
you got to have somebody who wants to do a
The-
deal.
I will, if we're all, I'm sorry,
No,
Congresswoman,
go
but I
ahead,
will
go
say
ahead.
that, take the politics out of it. The Republicans
You
are.
can't, though.
The Republicans are trying to do something, okay? I grant you that. But the Democrats are just demagoguing them, and nothing is getting done.
Please. The Republicans aren't demagoguing. Is that the point you're making?
Okay. We have to take a break here. We
Take
can
a
do this
break.
all
The
night
point
here.
is
I know we're going to
we
get
all
closer.
have to have
When we come back, we are going to bring you to D.C., where we heard tearful testimony as parents of Newtown victims, another issue being debated right now in Washington over gun laws. Went over the idea of a revised assault weapons ban. We'll talk about that and more after this.